What's going on, everyone? Charlie here. We're going to talk about China, specifically China 2030, and we're going to talk about the last basically half of a century that this undergoing transformation has been taking place. And we're also going to go over a little bit of the facts into what they were expecting to happen during this time we're living in now that was predicted, planned, executed, and written about in 2010. Let's go and take a look. So this is a very, very good document that I will link below so you can read this yourself. I'm not going to cover the whole thing. It's a 72-page document, but I am going to take some key points out of here to justify my reasoning for being bullish on China. Now, this is part one, the overview of China 2030, building a modern, harmonious, and creative high-income society, written in 2010. Section 1, unique factors behind China's economic success. Over the past 3 decades, so this would have been from the 80s through the 2010 era, China's two historic transformations, from a rural agricultural society to an urban industrial one, and from a command economy to a market-based one, have combined to yield spectacular results. Not only did economic growth soar, but the poverty rate fell from more than 65% to less than 10%, as some 500 million people were lifted out of poverty, and all the Millennium Development Goals have been reached or are within reach. Although growth rates differed across China, growth was rapid everywhere. Indeed, if mainland China's 31 provinces were regarded as independent economies, they would be among the 32 fastest growing economies in the world. Such rapid growth has been accompanied by many other achievements. For example, 2 of the world's top 10 banks are now Chinese. 61 Chinese companies are on the global Fortune 500 list. And China is home to the world's second largest highway network, the world's 3 longest sea bridges, and 6 of the world's 10 largest container ports. The country has also made large strides in health, education, science, and technology, and is quickly closing the gap on all these fronts with global leaders. Now, pragmatic and effective market-oriented reforms, along with balancing growth with social and macroeconomic stability. Let's look at pragmatic and effective market-oriented reforms. China's uniqueness amongst developing countries is not what it did to achieve success, but how it did it. China adapted a strategy known as crossing the river by feeling stones, which encouraged local governments to undertake bold pilot experiments. Balancing growth with social and macroeconomic stability. The difficult economic situation at the start of reforms in 1978 made economic growth an urgent priority. Early reform successes quickly transformed this priority into a national objective that was effectively used to mobilize all quarters of society, individuals and firms, as well as local governments, to focus their collective efforts on economic development. The government employed a mix of fiscal, administrative, and employment policies to maintain social stability during a period of rapid economic and structural change. This was no mean achievement. Given the need to employ an additional 9 million new entrants into the labor force each year, while also absorbing workers affected by policy shifts, such as the 1998 reforms of state-owned enterprises or SOEs, frictional unemployment, and occasional external economic shocks. Steady integration with the global economy. Rapid growth and structural change also presented macroeconomic challenges. The economy experienced occasional bouts of serious inflation, such as in the late 1980s and early 1990s, but macroeconomic stability was effectively restored through a combination of traditional monetary and fiscal policies, as well as administrative means. Next, we have steady integration with the global economy. With the establishment of special economic zones, Deng Xiaoping's remarks during his famous South China tour, and accession into the World Trade Organization as milestones, China expanded and deepened its economic integration with the global economy. This policy reaped large dividends for China, bringing investments, advanced technologies, and managerial expertise, opening the international market for China's goods and services, and giving a boost to China's international or internal economic reforms. The proximity of Hong Kong, SAR, China, and Taiwan helped, as did a large Chinese diaspora dispersed across the globe. Now, trends and characteristics at home and abroad in the next 2 decades. So remember, this was written in 2010, so this is a prediction for the next 20 years, up until 2030. Will China be able to sustain this performance over the next 2 decades? Much depends on how the global environment evolves on the structural forces that are already at work within China. But this much is certain. Trends at home and abroad will be very different over the next 20 years compared with the past 30. So they're saying basically from the 1980s up until 2010 is going to be a lot different than 2010 to 2030. Not only because China and other emerging markets have fundamentally reshaped the global economy, a trend that was accelerated by the recent global financial crisis, but also because new global challenges and opportunities are emerging that will significantly affect the future trajectory of the world's economies. Now, China's reforms, that are still ongoing at this time, have facilitated regional concentration of activities and captured agglomeration economies in coastal provinces, encouraged mobility of factors and goods across provinces and with the rest of the world, and established a high savings and investment-led growth process disciplined by the competitive pressures of globalization. Most important, China has avoided economic setbacks. Not only did economic growth average nearly 10% over more than 3 decades, it fell measurably below 8% only twice. During the recent global financial crisis, China continued rapid growth was a significant stabilizing force that partly counterbalanced the impact on global economic activity of the downturn and subsequent tepid recovery in the advanced economies. Now let's look at global megatrends. The last 3 decades saw a supportive global environment that undoubtedly assisted and accommodated China's rapid growth. Key elements included relatively open trade, rising flows of foreign direct investment, steady growth in the world's major markets, sharply declining transport costs, increased intra-industry trade, and the introduction and spread of information and communication technology. While extrapolating linearly from the past may be dangerous, some of these trends are indeed likely to persist. And then Supernote 5 here says, although the reputation of forecasting is rightly in disrepute, even for the short term, let alone the medium or long term, national development strategies do need to consider future trends in the global environment, difficult as that may be. The authors recognize that discontinuities and shocks, by their very nature, are difficult to anticipate. Ideas, technologies, events, and individual actions can sometimes snowball into powerful forces of change, the so-called butterfly effect, that occurs when initial conditions are such that a small change triggers large consequences. There is widespread consensus, for example, that in addition to China, other developing countries, especially middle-income emerging markets, will continue to outperform the advanced economies as they have for the past decade. One reason is their continued potential for technological catch-up. The other is continued slow growth in advanced economies owing to deleveraging and the impact of high sovereign debt burdens. I'm going to read that again. The other is continued slow growth in advanced economies owing to deleveraging and the impact of high sovereign debt burdens. By 2030, developing countries are expected to contribute 2/3 of global growth, 40% excluding China, and half of global output, 30% excluding China, and will be the main destinations of world trade. The larger emerging markets, China more so than others, will act as additional growth poles in a multipolar world economy. Now this is where it gets interesting. Perhaps the most important global megatrend is the rise of China itself. No other country is poised to have as much impact on the global economy over the next 2 decades as China. Even if China's growth rate slows, which it has, as they projected in this article that was written in 2010, it would still replace the United States as the world's largest economy by 2030, as projected. Now, again, this is crazy. Some have even argued that by 2030, China's influence in the global economy could approach that of the United Kingdom in 1870 or the United States in 1945. This is from another cited work entitled Submarinian 2011. Moreover, about global megatrends, China is poised to go through wrenching demographic change. The old age dependency ratio will double in the next 2 decades, reaching the current level in Norway and the Netherlands by 2030, between 22 and 23%. And the size of China's labor force is projected to start shrinking as soon as 2015. All planned changes. Yet workers will become more productive as physical and human capital stock per worker will continue to rise. Finally, total factor productivity, or TFP growth, which is a measure of improvements in economic efficiency and technological progress, has also declined, in part because the economy has exhausted gains from first-generation policy reforms and the absorption of imported technologies. As a result of all this, the distance to the technological frontier has shrunk, meaning it's closer than anticipated. And second-generation policy reforms, which what we're living through right now with the 3 red lines in the Evergrande narrative, are likely to have smaller impact on growth, which they have. So again, this is all explaining the things you've all been living through. 3 red lines policy, deleveraging. It's what it was for the real estate market. This was all written about in this document 10, 12 years before it happened. This is a huge deal, and it's literally in the finishing stages. You don't want to miss this, folks. Now, these factors together with rebalancing policies to emphasize domestic growth sources will contribute to a higher share of services and consumption in the economy and a lower share of exports. What have I been saying? What have I been trying to tell you? They're moving away from an export-based economy to a goods and service economy, which is the direct insinuated result of the supply chains. The challenge will be to support these growth and structural transitions while avoiding sudden slowdowns and possible crises. Also, another thing, so the rebalancing policies to emphasize domestic growth sources will contribute to a higher share of services and consumption in the economy and a lower share of exports, savings, and investment. Again, the challenge will be to support these growth and structural transitions while avoiding sudden slowdowns and possible crises. It's a global effort, folks. At the same time, rising educational standards and brisk growth in tertiary education is rapidly increasing the numbers of skilled workers and helping China move up the value chain. And this process is likely to accelerate in coming decades. The growing skill base will facilitate a further shift in production from labor-intensive to skill-intensive activities, and an increase in the pace of innovation. Indeed, just as in the 1980s and 1990s, when hundreds of millions of unskilled Chinese workers joined the global labor force as part of China's opening up strategy, so too will tens of millions of tertiary-educated Chinese workers join the global workforce to significantly expand the global supply of skill-intensive products. Indeed, the number of college graduates could swell by 200 million over the next 2 decades, more than the entire labor force of the United States. How government responds to a rapid slowdown will depend on its causes. One cause could be a macroeconomic shock. Say, I don't know, this was written about, 12 years ago? A sudden decline in real estate prices and a sharp contraction in construction and investment, or a rapid growth slowdown in the advanced economies leading to a sharply lower global trade and growth. Such risks could be significant in the short term, and there is a likelihood that China could face just such challenges over the course of the next 2 decades, which they have. Fortunately, unlike many other countries, China's fiscal and debt position allows it the space to respond with counter-cyclical measures. But these short-term policy responses should also be supportive of long-term structural reforms, such as those recommended in this report, which they have done. Now, the 2030 vision to build a modern, harmonious, and creative high-income society. A modern society is industrialized and urbanized and enjoys the quality of life that is on par with the Western world. This society would have modern values, a modern economic and social structure, with access to contemporary, state-of-the-art product and process technologies, and would engage and contribute as an equal with other nations in the discourse of the modern world on all subjects. A harmonious society. China sees three interrelated goals. First, in its own policies need to be inclusive and just, aimed at eliminating most social and economic boundaries and at building a society in which everyone has a common stake in the country's economic, social, legal, and political institutions. China would like to see a society where people show mutual respect. Disputes are resolved justly and peacefully through accepted norms, laws, regulations, and practices, and the institutional structure is quick to adapt to society's changing needs and aspirations. Second, China sees itself living in balance with nature, in which its ecological footprint, the use of resources, and creation of waste are consistent with the biological capacity of its and the world's land, water, and air resources given existing technology. And third, China would like to see itself as an equal, constructive, and accepted partner in the community of nations, working peacefully and cooperatively toward common goals and engaging constructively on global issues and in global institutions. As a creative society, China sees itself building its future prosperity on innovation, in which everyone's creative potential is tapped. Its success will lie in its ability to produce more value, not more products, enabling it to move up the value chain and compete globally in the same product space as advanced countries. Creativity will manifest itself not just in product and process technology, but also in cultural and artistic pursuits. If successful, China's experience could potentially be a beacon for other middle-income developing countries to follow. India, baby. We're hitting up India next. As a high-income society, China's aspiration is to enjoy a per capita income on par with advanced economies, have a large middle class that acts as a force for stability, good governance, and economic progress, eliminate poverty as it is known today, and promote social harmony by increasing equality of opportunity and lowering inequality in all its economic and social dimensions. Okay, I guess I put that slide on here twice. So, the case for a new strategy. Realizing China's vision for 2030 will demand a new development strategy. The development strategy is pursued over the past 3 decades, or the development strategy it pursued over the last 3 decades between 1980 and 2010 was directed at meeting the challenges of a different era. Not only have the challenges changed, but so have China's capabilities. No strategy lasts forever. Successful strategies must be flexible and adjust in accordance with the changing conditions. Hear that, group? Anyone in the group listening? That's why our group strategy always evolves. Right here. Same logic. No strategy lasts forever. The market is as a constantly evolving organism that we must adapt to in real time. Now, China's top decision makers recognize this challenge and have made transforming the economy basically the most important economic priority. Now, as far as the technology frontier, changing the development model is urgent because as an economy approaches the technology frontier and exhausts the potential for acquiring and applying technology from abroad, the role of the government needs to change fundamentally, which it is. Initiating this change early helps smooth the transition from importing new technologies to innovate and create new tech, which again, Chinese tech, baby. So there are 6 key directions of this new strategy. The first one is new strategic direction, or the first new strategic direction is the role of the state and the private sector. The recent global financial crisis in the advanced economies and, in stark contrast, China's continued rapid growth despite the global slowdown have led some in China to conclude that China's state dominance in key industrial and service sectors should continue, especially in the financial sector. Others, however, counter that China's vision of itself in 2030 as an innovative high-income society will require markets and the private sector to play a bigger role in resource allocation decisions, which they have. They consider the dominance of the state in the economy as potentially inhibiting China's efforts to move up the value chain, which explains BlackRock, Fidelity, Vanguard's inclusion in the China space, ETFs, money market funds, mutual funds, ADRs, and bonds, all increasing exposure over there in China. Now, this report makes 2 points. First, that government should encourage increased competition in the economy, including by increasing the ease of entry and exit of firms as soon as possible. And second, that public resources should be used to finance a wider range of public goods and services to support an increasingly complex and sophisticated economy. Key number 2. The second new strategic direction is encouraging system-wide innovation and adopting an open innovation system with links to global R&D networks. The third new strategy direction is that China should grow green, which explains your Bitcoin narratives, COVID, and more things. I'm not going to get into that. That's a little bit tinfoil, but hey, it is what it is. Number 4, the fourth new strategic direction is to promote equality of opportunity and social protection for all. JASME, data, protection, intellectual rights, IoT, it's all coming. All this is leading up to the technological frontier, like they're saying, and it's going to be IoT. Not NFT. NFT's the scam. It's the distraction. The real opportunity is your IoT. Now, the fifth new strategic direction is to build a sustainable fiscal system that will meet expected public finance challenges over the next 2 decades. Sixth and last, the sixth new strategic direction is to develop mutually beneficial relations for the rest of the world. Aww. So, it's coming. The research is there. The information's there. Don't let online social media get in your head. You have to look at the underlying documentation. Do you really think those mofos over there on Redbox are real people? Doubtful. There may be a few in the mix, but it's 2021 all over again. So don't fall for it. Don't become a product of social media, because that's what you are. When something's free and you use that, you become the product. Don't be a product, be a solution. To be a solution, read the documents. This has all been planned. It's not a surprise, and this opportunity will never happen again.